Preparing for FP&A at Endesa interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A mean to you, and how does it support a company like Endesa? FP&A is the discipline that connects financial data with operating decisions. In an energy company like Endesa, I would translate commercial and operational assumptions into forecasts, budgets, variance explanations, and recommendations. I would focus not only on reporting what happened, but explaining why it happened and what management should do next. That requires close partnership with operations, finance, and business leaders, plus disciplined scenario analysis when demand, prices, or regulation change. While answering, focus on planning, forecasting, performance analysis, decision support, cross-functional partnership, and translating operational drivers such as demand, prices, generation, and costs into financial outcomes. Question 2. Why do you want to join Endesa as an FP&A analyst? I am attracted to Endesa because it combines a critical infrastructure business with the transition toward cleaner and more flexible energy systems. That creates meaningful FP&A questions around demand, generation mix, investment, regulation, and profitability. I would bring strong analytical discipline, curiosity about operations, and clear communication with non-finance stakeholders. The role appeals to me because accurate forecasts and insightful variance analysis can directly improve resource allocation, capital decisions, and performance management. Make sure to cover Endesa's energy sector relevance, exposure to generation, networks, customers, and renewables, your analytical strengths, and how the role connects finance with operational and strategic decisions. Question 3. Walk me through how you would build an annual budget for Endesa. I would begin with strategic guidance, prior year actuals, and a clear planning timetable. Then I would build operating assumptions for demand, prices, generation, fuel, headcount, maintenance, capital expenditure, and working capital with the relevant teams. I would consolidate the submissions, test internal consistency, challenge material movements, and prepare scenarios for management. After approval, I would establish monthly tracking, ownership of variances, and forecast updates so the budget remains a decision tool rather than a static document. In your answer, talk about the timetable, top-down guidance, bottom-up operating assumptions, driver-based modeling, cross-functional review, consolidation, challenge sessions, approval, and ongoing monitoring against the plan. Question 4. How would you prepare a rolling forecast when market conditions are changing quickly? I would update the forecast on a defined cadence, using actual results through the latest closed period and refreshing only the assumptions that have genuinely changed. For Endesa, those might include power prices, demand, generation availability, fuel costs, weather, and regulatory items. I would produce a base case with upside and downside scenarios, quantify sensitivities, and document each change. The objective is a transparent view of likely outcomes, not an artificially precise number. Be sure to mention forecast frequency, key value drivers, actual-to-date information, updated assumptions, scenario ranges, sensitivity analysis, ownership, and communicating uncertainty without creating false precision. Question 5. How would you analyze a significant unfavorable variance in operating profit? I would first confirm that the variance is real by reconciling actuals to the ledger and prior forecast. Then I would bridge operating profit into volume, price, mix, generation, availability, input costs, fixed costs, timing, and exceptional items. I would speak with the responsible teams to validate the operational story, quantify what is temporary versus structural, and update the outlook. My explanation would finish with specific actions, owners, and timing rather than simply describing the gap. Focus on decomposing the variance into volume, price, mix, availability, cost, timing, and one-off effects. Validating data, identifying accountability, and converting findings into corrective actions. Question 6. What is driver-based planning, and how would you apply it in an energy business? Driver-based planning links financial outputs to measurable operating assumptions instead of relying mainly on historical percentages. For example, revenue could reflect customer volumes and realized prices, while generation costs could reflect output, plant availability, fuel prices, and efficiency. I would identify the few drivers that explain most of the result, assign ownership, and model their relationships transparently. This improves forecast quality, makes scenarios faster, and helps managers understand which operational levers influence earnings. Explain the relationship between operational drivers and financial results, using relevant examples such as demand, volumes, prices, generation, customers, headcount, maintenance, and CapEx intensity. Question 7. Which KPIs would you monitor for Endesa's generation, networks, and customer businesses? I would tailor KPIs to each business. Generation might include output, availability, achieved prices, production cost, renewable share, and EBITDA per megawatt-hour. Networks could require regulated asset investment, operating cost, reliability, connection activity, and allowed returns. Customer activities may need volumes, margin per customer, churn, bad debt, and service measures. Across the group, I would connect these to EBITDA, operating cash flow, CapEx, leverage, and return on invested capital to avoid isolated KPI management. Mention financial and operational KPIs, including revenue, EBITDA, margins, volumes, realized prices, availability, renewable output, network reliability, customer retention, cash flow, and capital efficiency. Question 8. How do the income statement, balance sheet, and cash flow statement connect in FP&A? The income statement shows profitability, but the balance sheet and cash flow reveal how that profit converts into funding capacity. For example, revenue growth may increase receivables, while CapEx increases fixed assets and reduces cash without immediately affecting operating profit. Depreciation lowers profit but is non-cash, and financing changes affect debt and interest. In FP&A, I would integrate all three statements so forecasts capture earnings, liquidity, capital requirements, and balance sheet constraints consistently. In your answer, explain profit generation, working capital movements, non-cash items, capital expenditure, financing, cash reconciliation, and why integrated statements are essential for forecasting liquidity and performance. Question 9. How would you forecast cash flow for an energy company? I would start with forecast EBITDA and adjust for taxes, interest, provisions, and working capital movements. Then I would model maintenance and growth CapEx by project, timing, and approval status, followed by disposals, debt movements, and other financing flows. In an energy business, I would pay particular attention to settlement timing, collateral, seasonal demand, and commodity-related cash requirements. Finally, I would reconcile opening cash to closing cash and stress test liquidity under adverse scenarios. Focus on EBITDA, working capital, taxes, interest, maintenance and growth CapEx, asset disposals, financing, seasonality, commodity exposure, and reconciliation to beginning and ending cash balances. Question 10. How would you evaluate a proposed renewable energy investment? I would assess the project's strategic fit and build an unlevered cash flow model from capacity, expected production, availability, degradation, realized prices, contracted revenues, CapEx, operating costs, taxes, and decommissioning assumptions. I would calculate NPV, IRR, payback, and value per unit of capacity, then test price, production, CapEx, delay, and financing sensitivities. I would also consider permitting, grid connection, counterparty, and regulatory risks. After approval, actual performance should be compared with the investment case. Be sure to cover strategic fit, production assumptions, power prices, subsidies or contracts, CapEx, operating costs, taxes, financing, NPV, IRR, sensitivities, risks, and post-investment performance tracking. Question 11. What would you do if operations challenged your forecast assumptions? I would treat the challenge as a chance to improve the forecast rather than defend my spreadsheet. First, I would understand the operational evidence behind their view and identify whether we disagree on facts, timing, or interpretation. I would compare both assumptions with historical performance, external indicators, and available data, then show the financial impact through scenarios. If uncertainty remained material, I would present both cases to management, clearly document ownership, and agree on monitoring triggers. Mention listening first, understanding the operational evidence, separating facts from judgment, using data and scenarios, documenting assumptions, escalating material disagreements, and preserving constructive business relationships. Question 12. Describe a time you used Excel to solve a complex financial problem. In a previous project, I built an Excel model to explain a recurring margin variance across products. I cleaned the source data with Power Query, separated volume, price, mix, and cost effects, and used structured assumptions rather than hard-coded adjustments. I added reconciliation checks to actual results and a dashboard for management. The model reduced manual analysis, made the monthly discussion more focused, and helped identify an unfavorable mix shift that required a commercial response. In your answer, describe the business question, data preparation, model structure, formulas or tools used, validation controls, result, and how the analysis improved a decision or reporting process. Question 13. How would you improve a manual monthly reporting process? I would map the process from source systems to final management pack, identifying repetitive manual steps, duplicate data entry, unclear definitions, and control weaknesses. I would standardize the chart of accounts and KPI logic, automate reliable data pulls where practical, and use a controlled template or reporting tool. Before implementation, I would reconcile automated outputs to established results, run parallel testing, and document ownership. Success would mean faster delivery, fewer errors, and more time for analysis. Focus on mapping the current process, eliminating duplicate inputs, standardizing definitions, automating data extraction, building controls, documenting ownership, testing outputs, and measuring time and accuracy improvements. Question 14. How do you ensure the accuracy and integrity of FP&A data? I use a control-based approach rather than relying on visual inspection. I reconcile source data to the general ledger, check entity and period completeness, compare totals with prior reports, and investigate unusual movements. Models should separate inputs, calculations, and outputs, with version control and documented assumptions. I also build automated checks for balance, missing data, and sign errors, then seek an independent review of material reports. Reliable analysis starts with a controlled information foundation. Be sure to mention source system reconciliation, control totals, period and entity checks, version control, documented assumptions, exception reviews, audit trails, and independent review of material outputs. Question 15. How would you explain a complex forecast variance to a non-finance manager? I would start with the headline, what moved, by how much, and whether it matters for the full year. Then I would explain the bridge in operational language, such as lower volumes, weaker prices, reduced availability, or higher maintenance costs. I would separate controllable from external factors and distinguish timing from permanent impact. Finally, I would state the forecast implication and proposed action. A simple visual bridge often communicates more effectively than a dense finance table. Mention starting with the headline, using plain language, linking financial movements to operational causes, quantifying impacts, avoiding jargon, listening to questions, and ending with actions or decisions required. Question 16. How would regulation and energy market volatility affect Endesa's forecasts? Regulation and market volatility can affect both revenue certainty and cost structure. I would distinguish regulated returns from merchant exposure, then model changes in power prices, demand, carbon costs, tariffs, taxes, subsidies, and compliance requirements. Rather than hiding uncertainty in one-point estimate, I would use scenarios and sensitivities with clear probabilities where appropriate. I would monitor policy developments, update assumptions promptly, and explain how each change affects EBITDA, cash flow, investment, and risk. In your answer, discuss regulated versus competitive activities, price and volume uncertainty, policy changes, carbon costs, subsidies, taxes, scenario planning, sensitivities, and prompt communication of assumptions. Question 17. What is the difference between a budget, forecast, and long-term plan? A budget is usually the approved financial commitment for a specific year and provides a baseline for accountability. A forecast is management's latest view of expected performance and should change when facts or assumptions change. A long-term plan covers several years and connects strategic choices, investment, funding, and value creation. I would keep their assumptions aligned but use different levels of detail. Operational precision in the budget, timely realism in the forecast, and strategic direction in the long-term plan. Explain their different purposes, time horizons, update frequencies, levels of detail, accountability roles, and relationship to strategy, while noting that all should use consistent assumptions and definitions. Question 18. How would you prioritize competing requests from senior stakeholders during the planning cycle? I would prioritize requests based on decision impact, deadline, financial materiality, regulatory importance, and dependencies. A request affecting a major investment committee decision would generally come before a low-impact presentation enhancement. I would clarify the required output and level of precision, reuse existing analysis where possible, and communicate realistic delivery times early. If demands exceeded capacity, I would make trade-offs visible to my manager and stakeholders rather than silently compromising quality or missing critical deadlines. Focus on business impact, urgency, decision deadlines, materiality, data availability, dependencies, regulatory requirements, stakeholder alignment, and communicating trade-offs when resources are limited. Question 19. What would you do if your forecast differed materially from the group reporting numbers? I would not assume either number was correct. I would reconcile the difference by checking scope, entity mapping, reporting currency, accounting treatment, period cutoff, eliminations, manual adjustments, and the version of assumptions used. I would trace both figures to source data and involve accounting or consolidation teams where necessary. Once the cause was identified, I would agree the correct treatment, document the reconciliation, update the model or report, and communicate the impact clearly to stakeholders. Mention stopping to reconcile definitions, scope, timing, exchange rates, eliminations, accounting treatments, and source data. Then agree a documented resolution before communicating externally. Question 20. What makes an excellent FP&A analyst at Endesa? An excellent FP&A analyst combines strong technical foundations with genuine understanding of the business. I would expect that person to produce accurate analysis, challenge assumptions constructively, understand how operational decisions affect financial results, and communicate clearly with different audiences. At Endesa, curiosity about energy markets and the transition to a lower carbon system would also matter. Most importantly, the analyst should move beyond reporting numbers by identifying risks, opportunities, and practical actions management can take. Be sure to combine technical accuracy, business understanding, curiosity, communication, ownership, data discipline, commercial judgment, collaboration, adaptability, and the ability to turn analysis into practical recommendations. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.